Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hi, I am Vinay Joseph, the Chief Investment Strategist at Standard Chartered Bank India. Welcome to another edition of Market Insights from the Experts, bringing you market views and insights on how you should look at your investment. Today, we are joined by Mr. Sankaran Naren, Executive Director and Chief Investment Officer at ICICI Prudential AMC Limited. Thank you, Naren, for joining.
Thank you.
So without further ado, let's kick things off with the most pressing question on everyone's mind. Indian equities continue to rise despite significant investor skepticism. Do you think the fundamentals justify a further extension of this rally, or is the recovery priced in?
So there's a structural long-term element. If you look at the corporate India is deleveraged. The financial sector is in good shape. And the government has been able to bring many issues to resolution. So from a long-term structural point of view, we are actually in good shape. The tactical problems are that investor exuberance has been very, very high, both globally and in India. And you have interest rates which are very, very low across the world and in India. And due to that, there is a reasonable amount of tactical risk. So how investors play it is through asset allocation and an ability to add into equities as and when there is a correction. This is how we look at the markets, that at some point of time, despite the structural positive overlay, there ought to be a correction in the next 24 months. One can never time it. And at that point of time, one should be willing to add to equities. And currently, they should practice asset allocation in view of elevated investor exuberance and elevated valuations, notwithstanding the structural positive markets.
Thank you, Naren. The next question is, returns on fixed income portfolio has reduced. Do you see bond yields heading higher? And if so, where are the opportunities for a pure fixed income investor?
Actually, bond yields in India are not that low. While they can still head higher, the 10-year bond yields are not as low as what it is in the Western world. So Indian bonds are at least pricing in certain things at 6.3, 6.4%. We do think that the near term, the interest rates could go up, particularly on the shorter side. But I think post 2023, we think that Indian fixed income actually has a good period ahead, given that India is one of the highest interest rates in the world and a very good long-term possibility, given that India has not seen excesses on the debt side as much as what we have seen in other parts of the world. So we think that India is going to be a structural story in the fixed income side also, but in the near term, maybe there are risks in the next 6 months, 9 months. But once those risks play out, we think even the Indian fixed income is going to be a structural story at some point of time.
Thank you, Naren. You are known to be a value investor. Do you see value style investing making a comeback? And if so, which would be your preferred value segment or sector?
Actually, what people don't realize is in the last 1 year, value has done extremely well. If you look at sectors like metals, for example, and even a sector like telecom and some other sectors, and compare it with sectors like consumer staples, actually value is done extremely well. And value is always done very well if you invested in a big bull market and waited for returns over a long period of time. So our view is that value is a very interesting investment in every bull market. We went and looked and found that in 1999, you would have gained by investing in value. In 2007, you would have gained by investing in value. In 2017, when small and mid caps were very costly, at that point of time, if you had invested in large caps at that point of time, which was value. So we think that in any bull market, investing in value has normally worked relative to everything else. And we think that value is also always likely to work in the long run, although there are always periodic hiccups which keep coming.
Thank you, Naren. And finally, what are the risks you see for this market as we enter 2022?
Actually, when I talk to people, I feel that there's extreme investor exuberance at this point of time across the world. The extreme investor exuberance is seen particularly in IPOs. It is seen in unlisted companies, and it is seen across the world in these areas. It is seen in new age growth areas. And I looked at what was the situation in 2007 also. I found that what we found in ICICI was that there are areas where there's exuberance, and at that point of time, there are other areas where things could be cheaper. And the same situation prevails at this point of time. And we think that it is the investor exuberance in certain areas which is most concerning from a risk point of view. And that is something which we worry about at this point of time. Particularly IPOs and unlisted stocks are the two areas which we worry most about at this point of time.
Thank you, Naren, for joining our podcast and sharing your views and giving us an idea of what to expect in the coming months. Thank you.
Thank you.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.